We have Vivek Rajpal, Nomura India, joining in. Vivek, I know for a fact that at Nomura, your analysis has suggested that the new governor has a neutral, dovish bent on monetary policy. What would the appointment of Shaktikanta do to the continuity of policies, and what are your expectations of him?
Right. Well, just to put things in perspective, we have been quite constructive on India overall in terms of markets. We are constructive on bond markets. We are also constructive on FX markets. We have seen some term premium getting built into the curve after the news of resignation of Dr. Rajpal as RBI Governor, and then we also had state election results coming out, which created some uncertainty. Having said that, in terms of economics, things are pretty okay for India. For example, inflation is really low. Inflation is well under control. Real yields in India are actually on one of the highest in the region. And the appointment of new governor, I would say has two implications. Number one, we believe now there will be a better coordination between the government and the RBI on various things. So from that perspective, probably a better policy coordination is a relatively good news for the markets. And number two, yes, we think new governor may have a neutral to dovish bias on the monetary policy. And these two things combined, and if you combine with the valuations, if you see the real yields in India are very high, gives us more comfort that on our bias that one should stay constructive on India bonds specifically. So that's the thought process.
Okay, Vivek, completely out of time. So very quickly, what do you see as a near-term trend in the currency as well as bond yields now that there's calm back in the markets?
Right. So that's what I'm trying to say. It's really a mix of a global and a local factors. As I said, India is operating at a higher real yield, and given the lower inflation trajectory, given RBI also sounded dovish when in its last policy meeting, we should see yields continue to decline in India over the next 3-4 months. Even on currency, we believe given the oil prices are still lower, and given that the US real yields are actually not moving higher, Fed is expected to turn dovish. We believe even rupee will perform okay from current levels. So we are actually constructive on the fixed income markets in India.
Okay. Vivek, out of time, so unfortunately, thanks so much for joining in on ET Now, giving us your perspective of what the new RBI governor could bring on the table for India, for India's economy, and of course for India's macros.